why we're using the inverted rates, but just know that this is the setup that we'll use with Receipt Bank when we're posting over items that have GST. The next section of Xero that requires a setup is the chart of accounts. So if you set up your chart of accounts or you import them and they come into the system without having a tax rate or the tax rate set to 0, it's a good idea before you set up the integration to keep the tax rate to the most used one for your company. So we're an Ontario-based company, so for this example we used HST on purchases as the default, and that HST on default will be a little bit more conducive to a better sales tax return when we actually get to that point. So if not all of us have gone through the Receipt Bank piece where it'll create adjustments, but it does. So we want to make sure that when it's adjusting things, it's not adjusting it from a tax basis of 0, it's adjusting it from the one that you'll use more often than not. So once you've made those 2 key setups within Xero, you're going to want to come back over to Receipt Bank. So on the Receipt Bank setup, this is where pulling items in is important, right? So you don't want to have a whole bunch of things in the inbox that are based on chart of account items or tax rates or things like that don't relate to anything yet. So by creating the Xero piece first, then moving to Receipt Bank and creating the integration, you're setting up the fact that any future receipt entries are going to be using data that's actually from Xero. So on this piece, we will just go over a couple of the settings and why they're important. When you're first setting up the Xero system, almost all of this is set to the defaults, and a lot of these are turned off. When the integration comes, you'll be asked to just obviously hook it up to the Xero account. It comes back really quickly. This synchronized projects and clients, it's a good idea to turn on if you're using tracking categories in Xero. Publish multi-currencies if you're using the premium edition of multi-currency in Xero. You can turn this on so that you can post using United States dollar accounts if you'd like. We like to post things to the purchases account instead of the bank account or expense claims. This allows us to create a workflow where we're always reviewing the accounts payable listing instead of going through bank by bank. It also doesn't require us to choose a payment method when we're going through the actual Receipt Bank work. So it offers up a little bit more efficiency and flexibility in that perspective. The publish items to purchases, this is one where it's completely your preference. We have some customers that will leave it on awaiting payment. We have some that have a lot of shareholder loans, so we'll put it to paid because given the new settings that exist, we can post a lot of the shareholder settings now directly right through to the shareholder accounts. So if you do have a workflow where you'd like things to be posted, go for it. If not, typically putting it to awaiting payment is fine, unless again there's other way to put it to draft where there might be other people involved. But these would be our 2 preferences. The expense reports, publishing them as well. Typically there's not a lot of changes that happen after you've posted it through to Xero, but if there is, you can still make entries, so putting it to awaiting payment is fine. This is the one that has and is the source of the most issues, I think, when it comes to posting over to Xero. So how do you actually publish the tax data? Dave did a great job writing the differences between these options, and just going to bring it over here. I suppose I could do a Control-F. Okay. Here we go. So it's under the Receipt Bank tax settings section. We don't have to go through this in super detail, but you should definitely give it a read. With the allowing Receipt Bank to decide with exceptions, this is telling you that if for any reason the sales tax accounts aren't, there's nothing actually in them or they're left as 0, it'll let Xero take over and own that kind of relationship. So if you meant for it to be 0, it'll actually come over and actually take the amounts that are assigned back to the chart of accounts tax rate. So that's not necessarily what you'd like to have happen. So there's a couple examples where this piece does work out really well, and that's when, well, just you can read it here too, but we don't really recommend it. Often results in ITCs being claimed for purchases that didn't actually include tax. So I don't think there's very many situations where we actually would use this, if any, but these next two are kind of important. Allowing Xero to calculate. If we choose this, it's typically for companies that are on the quick method, or if they're on a different tax percentage where they want to only claim a certain percentage for each expense item. So if you've set up the default chart of accounts in Xero for this, then to use a specific tax rate, then setting Receipt Bank up to say use Xero to calculate will let you post things through a lot faster. You may even turn on auto sync, and things can kind of go from there. But our favorite, obviously, and the one that allows us to manage the entire process is the allowing Receipt Bank to decide option. What this means is that it doesn't matter what Xero has in this tax rate section. It just matters that whatever's in Receipt Bank is what's going to get posted as the net GST or HST amount to the sales tax account. So very important. I guess we'll get into questions there. I'm realizing that we're on time a little bit here, so I've got to go a little bit faster. The setup, once you choose allow Receipt Bank to decide, we like to keep the tax rate drop downs turned on and supplier tax rates turned on as well. So you can see that there's a lot of changes that have happened once you've gone through and made those that integration setup. Once it's here, it all saves in real time. The next thing we do is we go into account details and turn on image sharing. It's good for when you're exporting items. It's just one of those small things we do right in the very beginning. So we've covered the two things in Xero that are required to make this sort of setup work. We've covered the integration and why it's important to choose allow Receipt Bank to decide, preferences around these two pieces. And now we're going to get into the actual mechanics of working with a couple of the biggest issues that we see on a sort of day-to-day basis. So these 5 items were just added this morning. You'll notice that there's a couple multi-currency items and there's a couple that aren't ready to be approved. We're going to go through this really quickly. I'd say in about 5 minutes, 5 or 8 minutes, we should be finished. But it'll be the source for a lot of the questions because we would like to see what kind of questions you guys have. So the first one, I want to open up Apple really quickly, and the reason why is because it's a very simple receipt. A lot of things were picked off from it, but in a sort of desktop world where we all kind of came from, you're used to putting in tax rates, and you're used to choosing those rates from a drop-down or from a list, and you kind of move on. The fundamental, efficiency gain with Receipt Bank is that they have this methodology called extracted amount, and if you've seen this, it's different than just choosing the rate because it allows you to just do it really quickly. So in terms of finding the tax amount, if we were to choose the 13% for the HST on purchases, we'd notice that the amount still stays at $264.85, but it took you some time to actually click it. With extracted amount, you can just verify that it's been there and you're ready to go. So by having this as part of the examples today, show that the extracted amount is pretty powerful if you just need to quickly change that off by a penny, if that's what it was, and that's there. It also, under the extracted amount, takes the default tax rate that you've set up in Xero for your sales tax return. So by choosing extracted amount, you're saying whatever account is related to computer equipment, that's what the majority of the posting is going to be. It's going to work out in the background the difference between what you've posted through Receipt Bank and 13%, and then any differences will be adjusted for in something that you really won't see unless you look really hard, and at the end of the day, the right amount gets posted to the sales tax account. So this is sort of the foundation of how things get posted and why it's so important, again, to set up those chart of accounts in the beginning. So from here, as things are posted through, we might as well just publish it over and we're good to go. We're going to skip this one just for time really quickly. All right. The next example is BC. So obviously we're going to have a lot of questions around PST today, and this will be sort of the quick introduction to this. For items that come from receipt bank right away, they'll typically take the total amount of the GST and the PST. If that's not the case, and it went through the engine and only 5% was taken, and you don't want to change it, you could leave it at 5% and kind of move it through. But if it is left to 12% and you just want to quickly go through and it's not really broken out like that, you can take the extracted amount and come use these inverted rates that we created back in the beginning in Xero. And if we were to choose the BC PST, you're going to notice that the tax amount changes to $5. And that's because, if we go back to the tax settings, we've used this inverse rate of 4.6729, which is again part of that receipt bank table that Dave put together for each one of the provinces. That rate worked out that the GST was 5%, and the 5% will get coded. So you have two options, right? You can post the 5 over manually with the extracted amount, or you can just choose this amount for here. If you've got a supplier that's always in BC, you can change the supplier default so that the tax amount that's used for that fake company is always GST on purchases. So it's always kind of picking it up, and you never have to do that again. Really quickly, just because I did mention it, we could come in here and say, for fake company, the tax rate will always be GST on purchases PST. When you're setting up those supplier defaults, it just makes your life a little bit easier as it posts through. So when this does get published over into Xero, we'll look at it in a minute. It should come over really quickly. Live demo. Let's hope it works. Give it a few seconds. If that doesn't work in 10 seconds, I'll come back to it. Yeah, we'll come back. Okay, so from a BC perspective, that's, I know we went over it pretty quickly because I do want to give over to the questions, but that's the method that we're using. Meals and entertainment. From this perspective, we're always used to putting tips on separate lines and then marking the tip as tax exempt. But in Xero or in Receipt Bank, it's pretty easy to take advantage of their technology and then post over the items into Xero so that you don't have to create those separate line items yourself. So I know in the beginning we were tempted to come down and choose edit items, create a couple line items, and then go from there. But really quickly we realized that if $31 is the total amount of the receipt and we've got 307 that's related to HST on this, just using that extracted amount and posting it through will allow us to just have the 307 taxable on that item, and nothing else like the tip won't be taxable. So all those entries that get posted into Xero will have an adjustment already. So do want to post that. And the fact that meals and entertainment is chosen here is another important aspect of this. So let's hope this publishes really quickly, because what's going to happen is under the chart of accounts, there's going to be, let's see here, under meals. You'll notice that we put the default tax rate for this as HST on meals and entertainment. So by doing that, when we're running the sales tax report at the end of the year, we can look at this number specifically in its own section and then make our entry manually to move the amounts that aren't 50% and expense them right back to the meals and entertainment account. So if we go back here, the fake company item. So from here, we can see that it posts the 5 perfectly because we used the right rate. Everybody's happy. And the full 107 got put to consulting fees, and the $5 was broken out. The next example that we'll go through, I know because we're on time here, 10 minutes late, sorry, is the GST only receipt. So if we break this up a little bit bigger, you can see that GST on goods was the only item that was part of this Canada Border Services Agency invoice. So typically, I mean, it's pretty hard to get this into Receipt Bank before, but Dave found a really cool trick. That's again, it's released. It's mentioned in this. See here. There, import taxes. There's a whole section on import taxes, so it'll go through and kind of break up the screenshots of how you can deal with that one. But in real life, what will happen is Receipt Bank will typically find that full $295.21 as the tax amount and the total amount. And you'll notice that Receipt Bank is smart enough, well, not to post that, so it has validation errors, so incorrect GST amount. So I'm sure this has to do with Xero's side too, but if it's like this, you're just not going to be able to post it through because of the limitations. What you can choose under this category is the sales tax account, so that the full $295.21 gets coded right to the sales tax account. But if you do that, just like when you make manual entries in Xero back to the sales tax account in Xero, it won't show up on the sales tax report for now. So we have to get it in there. And the way that you do that is by choosing the tax rate that has sales tax on imports. So sales tax on imports isn't something that you actually have to choose. It's a rate that is built into Xero when it comes native. And you'll notice that it switches the tax amount to 0, so that just the full amount gets put to sales tax. And now, because you actually have a sales tax type, that will be part of the sales tax return. And that's the piece that we've always been missing when we're coding things directly to the sales tax account. Caveat that, I guess, with items that have GST and duty or something like that. Pretend like this item did. You could come in and press 2 items where one of them, pretend like we had a duty account there, one of them would go to duty and then one of them would go to sales tax. And then on the tax amount, this would be exempt. Sorry, if that was duty, it would be exempt. And if the sales tax amount was here, just like before, you'd choose the sales tax on imports and then put the description on the amounts. And then these two would break out so that you could actually post it through without having to send it to Xero first and then manually manipulate it there. I'm going to publish this actually, so just give me a second. The last one is the multi-currency. So if you've got a premium Xero account and you're posting it over through with multi-currency items, typically Receipt Bank will pick out what the tax amount is. Obviously, that's good for accuracy purposes, but bad for Canadians because we can't claim back the ITCs. So in this perspective, what we could do is just come over here and choose tax exempt. When that's posted now, it will not have any with it. And even though the advertising account has that 13% assigned to it, there's going to be a quick little adjustment that's made. And when we publish it, you'll be able to see what that kind of looks like in Xero. So for the last few seconds here, while we go through the demo, you'll be able to see how everything kind of came over and understand kind of where we went with that. So on the Canada Border Services Agency post, sorry, I forgot to put a description in there, but the sales tax on imports, just like we expected, going to the sales tax account for $295 is there. Obviously this is okay because it's all within the line that's going to the sales tax account, so we're good. From the Apple item, you'll notice that it came over with the extracted amount, but it also picked that tax rate that we wanted because that was the native chart of account for it. The next one, I think we did fake company already, and the last one, the pub. So this will take whatever the rate is that was used for the chart of accounts default, and then make sure that it uses that tax rate to calculate the $3.07 that's related to the amount that you want to obviously claim back. And then the rest is just math, working out what the difference is using the difference as a tax exempt line. So it's a little bit dirtier when you're looking at it, but it creates all the entries the way you want, so at least you can be happy that things are there. I guess because we said we only want to do 20 minutes and we went a little bit over, let's stop here. We'll start with questions and go. So apologize for going a little bit over. Didn't expect it to go that long. Sorry. And then let's do questions now. So how this will work is, obviously send through your questions if you like. Dave's going to be moderating and going through all the questions. If there's a question that relates to the sort of the public good here, he'll post it up and then I'll just answer it in real time. So I guess we'll just wait for questions here first. If none come in the first few minutes, we'll go over something else. All right, first one came in. So we've got how do you handle the HST restriction on entertainment from Peter? Hi, Peter. So this question is a good one, which is why we set up the entire in the very beginning around having that tax rate that has the HST on meals and entertainment. So I know hopefully I'm coming at this with the right angle that you're looking for, but in the sales tax return, because we're posting it through at the full 13%, at the end of the sales tax period, annually, quarterly, monthly, what we'll end up doing is taking this amount that's related to the HSTs and meal and entertainment, and after a quick review, make an entry for half, expense it back to meals and entertainment, and then what will be remaining for this piece will be what goes on the report when we're doing the sales tax return. So obviously we've got a little bit of a manual process here, but it's less of a manual process than not having it broken out by itself. So here there's only the one item, but if we were to export that out and use this as our support when we're doing the actual HST return, we would as part of this just have the tax amount for 307 and put the other half back to the meals and entertainment section. Does that sort of answer the question, or were you coming at it from a different angle on sort of special HST restrictions on types of entertainment? Maybe. I know we want to keep it kind of broad here, so if there's any additional follow-up to that, please send it through. Okay, thanks. So we get a bunch of questions just come in, which is awesome. Dave is just going through them right now. As he, I guess, while he posts the next one up here, how we deal with sales tax returns is we do export them out to Google Docs or Excel, just depending, and then we do our sort of working papers here. So we'll take the sales tax audit return or the audit report. We'll go through, make our entries, attach the income statement so that it acts as a standalone document. Any entries that do need to be made are made. Then at the end of the day, we create a bill or a receivable, depending on what the balance owing or owed is, and that will bring the GL balance for the sales tax return or sales tax account back down to zero, is at the ending date of the period. It's always been clean that way. Allows for easy matching when you're doing your bills and your invoices through the bank rec, and that's kind of how we keep it. And then we attach a copy of this to the actual bill so that you're supported in any case like that. All right. The next thing, multi-currency receipt. Are you waiting for it to come over to Xero? It's a good question. Let's see. I think I might not even have pressed the publish button, but we'll see. Okay, it's published now. Let's see what we're dealing with. So multi-currency was RB Solutions, I believe, yeah, because you can see the GBP. I guess it just took a little bit longer than the normal 10 seconds. So in this perspective, it came over. There was zero tax. This is how it comes up. It's exactly how we wanted it to be, and then it's all there. So I think thanks for that question. So we can have it here in the recording. Next question says, and that was Puneet. Thanks, Puneet. The next question is again from Peter. Okay, so that's good. So it might be the follow-up. It says we use a 50% rate so that only the eligible rate gets claimed. great. You can do that. If you've also looked at some of the math behind that and you start looking at it, sometimes it can be off by pennies when you do the 50%. Again, it depends again on the exclusive versus inclusive pieces, but we've just found that when you're in a groove, you don't want to always go through and select that rate. You don't have to if you're using the full amount and then the adjustment. So again, like we said, there's a lot of different ways to go through and make these adjustments and do the workings. And again, that's another way, and there's nothing wrong with it except for I found in a couple calculations that it was just off slightly. So maybe you don't have that experience, but it was one of the reasons why we went and did it this way instead of just using the 50% rate. So under bills, what we're going to go through is, let's see here. It's the good thing about having Dave in the background. There's an example here of using a 50% rate. So what he did was he created a 50% rate of 6.5 for the 50%, and then used the exact same amount of 29.11. Right, so if we go back and hit up this other receipt, we'll hit the POG again. Thanks for doing that, Dave. You'll see that if you took the 307 and divide it by 2, it actually equals $1.54. So just for webinar purposes, we'll do the math out here. Divided by 2, $1.54. Now if you go over to the 50% rate and you apply it, it came over as $1.89. So it's small, but it does add up over time. Would require you to do a little bit of other work in Receipt Bank to push it through, but that's the biggest reason why. I mean, it's immaterial, obviously, but for us, that's there. So maybe if we could take that offline too afterwards, if you have any more questions, we could bring it up. But I know there's a whole bunch of other questions that came in from other people. All right, so the next question that came in was, how do you handle USD transactions when the client is not using the Premier Edition? So when the client isn't using the Premier Edition, that means that any items that get posted over, and of course I had to post them all, go back to the GBP one, we'll use the amount in the total amount CAD field. So unfortunately, if the client is using this, you have to be sure of what that amount is before it goes over, which is why, I mean, this is the decision that we made early on, was just everybody gets premium just in case we had to deal with these things. It's a lot harder to go back to your statement and find the amount and post, or allow it to post and then adjust it. It's not, obviously it's not ideal, but with a premium edition, you'll be able to do that. Is there anything you want to add there, Dave, in terms of getting it in? Yeah, so it's just the CAD equivalent. There's no other way around it. So that's that question. Thanks. Thank you. Next question. Let's see. So there's a couple questions around actual HST audits and denials. I think that's it's a good tax question, but maybe out of the scope for this one, we can take it offline and answer that there. But that could be an experience thing. We just want to keep it to the legalities here. So that's why we're posting it this way. Okay, the next one's from Puneet again. Hi, Puneet. In terms of his question, he says, could you please go over the GST PST receipt again and the use of the inverted tax rates? Sure. So if we go back to the GST item, you'll see that it came into Receipt Bank with the two items broken out. Now, regardless of what happens, typically, unless you've got a supplier tax rate by default set, the extracted amount will come out, and it'll either say 5 or it'll either say 12, say 112. It typically never says the PST amount, but I know that's obviously something that is getting better over time. With this item, we want to make sure that the $7 gets expensed and the $5 stays as part of the ITC. So in that case, choosing that special inverted rate does all of the math relating to just picking up the $5. And you can see that chosen rate like this. And there's a really good write-up of all this PST work at the very, very end of the manual. So it goes through and just kind of says in a whole bunch of tax talk. Dave was an ex-HST guy working with the CRA, so he loves his terms there. They're all pretty good. The example calculation is pretty easy to follow, so you can see how the kind of math works. And then you just take 112 and times it by whatever percentage it is, and it'll come back with that $5 amount being part of the GST posting. Now, part of your question was the inverted rates in Xero. So if we go back to tax rates, for illustration purposes, we set these tax rates up, as of what's in the manual. The math behind it is again right at the very bottom of it. But when it is set up, it's not a compounded piece, so you don't break out the GST and the PST. Once it's been used within Xero, it'll turn gray so that it's uneditable, and then that's related for all of them. The way that I guess we're all trained to do is go back to setting up compounded rates, and this is where we know that there's work being done or scheduled to be done on this, and when Canada gets their PST rewrite, we'll all be pretty happy. But for now, this is the workaround that has to happen. I know you can reach out to Xero if you have any questions on that, but from our perspective, setting the BC rate up like this is another option. And again, like I said in the very beginning, you can do this a whole bunch of different ways. But if you did do it this way and broke out the PST, one of the things you'd need to do is go into that sales tax audit report and then expense out the PST portions. We've had some customers do this because it was easier for them than doing the converted rate, or they just started this way and wanted to keep on with it. It's really just a little extra entry where you'd go in, figure out what the differences are, and then it was their choice whether or not they wanted to put PST to a PST expense line on its own or add it back to all the unique chart of account items that were part of the transaction list that had the PST. So Puneet, if that answers your question, thanks. If not, feel free to reach out afterwards, and the guys at Receipt Bank will definitely help you out there. One of the notes I just got from Dave was that all the sort of major material questions here that were coming are dealt with. I'm going to read through just a couple, but if there's any other questions or you really want your other question to be answered up in public, just push through a +1 or something. Well, just give me 1 second here. So there's one question that just says, hi, so the extracted tax rate option in Receipt Bank, extracted option tax rate is only useful once the account in Xero has been set up with the correct tax rate, like for meals. I think what we're saying is set it up in Xero first, make sure that the chart of accounts has its associated default, and then once it comes back into Receipt Bank, put it there. So I think Dave might have already answered that one for you. So at least we went through there in the public. Dave, is there anything else? Yeah, good. He's answered most people. Adam, I didn't expect to go through the questions like that. That's pretty good.
Yeah, no, that's great. And just to reassure everybody else out there, I'll change presenters. I'll give you guys that partners@Receipt Bank email. So any additional questions, feel free to shoot over to our support team. Again, you have that tax manual to reference it. So I think, Chad, you've done a great job on the index, really outlining, they don't have to read all 30 pages just to find out the answers to their questions. It's pretty detailed as to where to find the specific questions you guys have. And I guess for those of you guys who aren't right now Receipt Bank partners, it's that same email address that I'll share with you now. Chad, I'm just going to switch it over. Was there anything last that you wanted to show?
I don't think so. I mean, that's the majority of the stuff. We covered it really quickly around how to do the sales tax return. I think the whole reason why you do this is so that it's not hard to do the sales tax return at the end of the day. So I guess if we're going to reiterate anything, it's just when it comes to running a report to make sure that your sales tax return is good, one of the things we do is just run a account transactions report for the sales tax account and make sure that the beginning balance is zero and the ending balance is what you owe. And if it's not, then there's an issue, right? So then what we'll do at the end of September here is, create the bill to offset it, or the receivable in this case, and then the account is back to zero at the end of the month, or at the end of the sales tax period. Everything's supported, and then you're rocking, and that's why we chose this method, because it all results back in a tax return or a sales tax return that's pretty easy to follow through.
Perfect, excellent, thanks, Chad. So I'm just gonna change the presenter back to me for a second. And show my screen. Just get that email address on there. So any of you guys can jot that down. If you have any other tax questions or receipt bank related questions about our partner program and our fast track program, just reach out to us and we'll be sure to get in touch with you. If anybody's questions went unanswered, don't worry about it. We do have the report, so we're going to take a look at that and we'll reach out to you one-on-one and get that answered as well. Just to finish off, guys, we do have, I know for those of you guys who also have QuickBooks Online clients as well, we are running a webinar that will be recorded in the same fashion on Thursday. So we can get that out to you if you don't have a chance to sit in. But I know there are slightly different setup things, and how it comes through from Receipt Bank side is a little bit different. So we're going to go over that as well, and we can get that over to you if you'd like. Cool. And other than that, Dave, Chad, thank you so much for your help. Thank you for that tax manual. I'm glad that our partners have that as a resource. And unless there's anything else you guys would like to share, thanks a lot. And I think we'll kick it off next time on Thursday.
Got the all good from Dave, so we're all good.
Sweet. Awesome, guys. All right. Thanks, everyone. Thanks for joining us, and we'll speak to you guys soon. Cheers.
Yeah, thanks. See ya.